And we're laughing to start. Good morning,
Yeah.
everyone. This is Morning Market Movers. Brian and I are having some fun this morning. It is March 16th, and we're going to be doing some live analysis for day trading, taking a look at hot spots in the markets for today. My name is Todd. With me, Brian Caprice from Keep Trading Simple. And yes, we are laughing and goofing off a little bit in the background. But that's because we're in a good mood. We've got reason to be in a good mood. Well, one, equities are all looking to open solidly in the green. We're going to be looking at that after a solid day yesterday. Some of the encouragement there is comments from Zelensky out of the Ukraine that Russia's negotiations at the table are starting to sound more realistic, um, which is encouraging. Maybe they'll be able to come to some type of accommodation. What else are we seeing in the market? We had Canadian inflation data this morning. Yes, their inflation is up. The Canadian dollar is seeing strength, of course, and Brian will go through that. Interestingly enough, that move started happening well before the data came out. U.S. retail sales coming in a little lower than expected, but little to no impact on the markets. Really, no impact on the markets. But what we are going to be talking about is what to look forward to later today. This morning, oil inventory reports at 10:30, particularly on the heels of the API report from yesterday. We are going to go through oil because that number could move the markets, depending upon. We're expecting to see probably a surplus here. Um, and then, of course, I buried the lead. Today is Fed Decision Day. At 2 o'clock Eastern, they are going to announce the economic projections and then the interest rate decision, which everyone is expecting to be 25 basis points. Anything different than that would be a surprise. Personally, I'd love to see 50, but just to get us going to front load this thing. But I think they're just going to start off with a toe in the water. Anyhow, before we get into it, and we're just going to jump and we're going to get into those charts and take a look at some levels, particularly with oil coming up this morning, and then the equities making some moves today. But before we do that, I do need to share this disclaimer that trading involves risk, may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. And this is where we're going to start off. I mean, look at that. That going down is Canadian dollar strength. So, Brian, let me flip it over to you and let's take a look at some of those numbers that came out of Canada and maybe some levels for that Canadian dollar.
Yeah, yesterday we mentioned that we could see big movement in the dollar CAD going to the downside. One, it needed to recouple back with oil. Oil, obviously is down from its highs, but still much higher than it was, and the
Oh,
Canadian dollar didn't actually take that ride.
that too.
So what?
Yeah, and that too. I did that
Oh,
recoupling. I didn't even mention that.
yeah.
Those
It was probably more the recoupling. Now, the market did expect good data. We had seen good data out of Canada, and we expected to see it today. They were all expected to be good numbers. They were a little bit higher than expected. And again, you may say, "Oh, it's only 0.1." Yeah, it's only 0.1, but again, that matters when we're talking about something that's less than 2%. So over a monthly, month over month basis, it was 1% higher. So again, Canada is now at the stage, and again, Canada is making a lot of money with the oil scenario right now. So it was one of those things that it's like if they see continued inflation, they're going to be raising next. And again, because it had decoupled, there was a number of different factors. It's down 132. It's over daily ATR already today. It is kind of set up. No, it's kind of the scenario we talked about yesterday was really watching it kind of fall to recouple itself, and then depending on the rise today, seeing kind of a little bit of a profit taking / retracement in the dollar, right? Because there will be a little bit of an initial reaction. Not so much that the market hasn't priced it in, but the fact that, yes, you are suddenly getting more for the dollars that are held. So there's going to be a natural, like, yeah, we like that. So there will be a natural, a bit of a push there anyway. So um, retail sales data came in weaker than expected. It was already expected to be down. Overall retail sales was expected to be 0.3, came in at, or, I'm sorry, 0.4 came in at 0.3. The core numbers came in much less than expected at 0.2. The initial response of the market was obviously down on that one. And again, this kind of is another one of those factors. Again, the Fed knew what this was earlier in the week. They're on day two of the meeting. And that's really going to be the main focus of everything today is going to be that Fed funds rate. I mean, actually, if you look at some of the things, they're like, oh, it's a historic day. It's not historic. I mean, the United States has raised rates in the past. I'm not sure why Zero Hedge is trying to jump it up, but the reality is
It's
raising
historic
interest
for
rates
the
in the market
last 4
2 years.
years.
Yes. Yeah. Yeah. So historic. It's epic. It's epic. You know,
Yeah.
one of those most overused words ever. So yeah, I mean that's going to kind of really suck a lot of the attention of things today. Now, all the markets have responded positive. As Todd mentioned, Zelensky has mentioned that, hey, listen, it seems like they're a bit more realistic. But at the same time, when he says Moscow's finally coming to terms with its failure, that I don't believe, and I don't know that that's telling Moscow that they failed is probably not the best idea. I feel like there's a lot of ego driven into this whole thing, but both sides have mentioned it again. Remember, yesterday everything was great until Putin was like, "They're not realistic. We're out," and that turned everything immediately. So um, again, it hasn't escalated. It hasn't gotten even worse. We haven't gone to like new levels of atrocities out there. So that's always kind of a positive bit. And then we did actually get some verifying data out of China, which is important. And
Oh
again, we've seen
yeah.
the Chinese market rally back huge because of it. Yesterday, I mentioned that they haven't necessarily been transparent. We didn't really know what it was. They just know that they had COVID cases. This morning, it was kind of broke that they said this is the highest levels they've seen since the initial surge. Again, not great news, but it's of the highly transmissible Omicron variant. So I was like, oh, it's Omicron? Pfft, don't care.
Yeah.
You know, and that's literally the response because the Chinese market literally skyrocketed. Everything it lost yesterday went straight back up again. Absolutely huge move. And again, it's because what we've seen from Omicron is it really wasn't as severe, right? It wasn't killing people. More people were getting it, of course, but not people. People were not dying. All the percentages were down. It was kind of like this is just a crappy flu, you know. Um,
And
so
by the way, that's a lesson. I hope other people, other countries pick that up. Transparency is good. When there's uncertainty and people have no clue what's happening, hey, something's happening. I mean, your mind goes to the worst place, and we're thinking, oh my God, is this a new variant? Is this, oh my God, is this theta? I'm trying to think what the next letter in the Greek alphabet is, or or some other that's going to be some face melting variant that that's going to have
mm,
uh, massive global implications. And when they find out it's just Omicron, well, now that we know, I mean, I'm going to bring that up real quickly. I just want to show. If we go back to these indices, I mean, you take a look at the Chinese it's, I mean, it took back everything. Oh, here,
you're on
sorry.
my chart still. There you
There
go.
we go. I mean, it literally it was getting absolutely hammered, decimated. 14,000 was flirting down at 12,000, all the way back up and some. Once they gave a little transparency, like this is what it is, and once people know, they go, "I'm okay with that." At least now we know what's coming. So there's a little bit of evidence right there specifically for transparency. So sorry,
Yeah,
little sidetrack.
yeah, and remember, it's also play on fear and greed. Oh my God, we're going to lock down 51 million people. Everybody needs to sell this. This is horrible. And all those people selling, there's got to be somebody dumb enough to buy it on the other side of the coin. All those people that were buying it saying, "Haha, you just saw the news. It's already gone down a lot. And you want to sell it now? Okay, sounds good. I'll buy it from you." Um, I got to understand a lot of the things that we already see when we play. And again, this kind of goes back to what I mentioned a couple days ago about how people are saying that the United States is actually trailing Russia now in this whole kind of scenario. If you are it depends if you were reactive or you were the initiator, right? Right
Yeah.
now, in this case, everybody that was reacting to this news yesterday saying, "Oh my God, this is horrible," and I'm selling after a large move in price, all those people are now kind of stuck in a really, really bad short as the price is going back up again. It's kind of the same way in anything, really. You don't want to be the person that buys it at the most expensive price. There's no merit badge for being the person that spent the most for something,
Or
right?
sells it at the bottom.
Right. Yeah. I mean, we know we're supposed to buy low and sell high, but the reality is most people, because they use their gut and their feelings of what they think is going to happen, they do the exact opposite. Oh my God, it's gone down so much. And the
Yep.
industry will trick you. Oh, if you loved it at 50, you're going to love it even more at 25. And yeah, things can go to zero. There's reasons why you don't want to do that. But you don't want to be getting out of your positions at the wrong areas. And it's why it's important to understand where good areas of buying and selling are. This is one of those scenarios. People see China, it's like, oh my God, it's done.
Right.
51 million people. It's horrible. This is the next variant. And again, as Todd mentioned, people are tend to lean more towards the pessimistic side of investing, just in general, right? Right now, with everything in the world, everything is pessimistic based, right? Nobody turns on CNBC or the news to talk about world peace. They want to know who got bombed, what hospital. That's all people care about. It's the
Dirty
train wrecking,
laundry.
right?
Yep.
Yeah, that's all it is. So that's why people think about the worst. So again, the recovery is not surprising. But if you talk about one of the biggest kind of contagions of that yesterday would have been oil. Okay,
Yep.
going across the oil, you can see oil took an absolutely massive ride down right over the really like the last week, but over the last couple of days again because of China. But unlike China, it didn't do this. Go straight back up again to where it was prior, pre that news. Why? Because the lockdown is still there. Whether it's Omicron or not Omicron, the lockdown is still there. In the near term, there's definitely going to be a less kind of demand-based situation, right? We know one of our big stories today is going to be our oil inventory report at 10:30. The forecast is expected to be minus 1.8 million barrels. Again, they see minus 1.8. They're like, oh, that's it. That's 50 cents more in gas. Well, the API oil inventory report actually came in at a really close same forecast, 1.86, but yet they're saying that there's a 3.7 million surplus. We got extra oil. Is that going to bring us back under $4 a gallon? I highly doubt it, but there could be some action in this one. And again, if you look in the overnight, what did the Europeans do with it? Nothing. The
Well, there was
Europeans didn't do anything.
yeah. Oh, there was a little bit of a sell-off, and then oh no, I see it. You're right. And then a bounce this morning at the 5:30. The
Yeah,
5:30.
I mean, and the oil inventory report came out here, right? Huge surplus, and it went up kind of
Yeah.
maybe $1, and then kind of back down, and we're at the exact same spot we were this time yesterday afternoon. So Europeans didn't really do much with it. I wouldn't say that there was any kind of major reaction to that. And again, that's a pretty healthy, plus, being supposed to be almost -2 and coming in at almost +4. That's
5 million.
it's quite a big swing, right? And there was almost no reaction to it. It just shows you how big of a kind of scenario that, or how big of a contagion
China. Yep.
locking down. And again, could they lock down more? Absolutely. That's the main focus out there right now. And with that, Boris is actually going to, where is it? There was a piece down here. Boris is actually going to Saudi Arabia, I think it was. Yeah, Boris is going to Saudi Arabia to start talking about, trying to build, this international coalition against the Russian invasion for energy. Saudi Arabia's already in an international kind of coalition called OPEC Plus, so OPEC. So he's trying his best, but again, more leaders are going out to the Middle East and saying, "Hey, listen, we need some more help with this. You need to produce more oil," and so it's definitely something that is on everybody's radar. And again, remember, if China unlocks COVID in a couple, a week, right? Because remember, Omicron doesn't last a long time. Oil could be get a massive spike once they're lifting lockdowns. So, thus far from yesterday, the drop, it's actually maintaining. It's starting to go back up a little bit. And again, we will see what that data looks like. The market has probably started to price in this positive 3.7. I wouldn't be surprised if this is a miss, though. A lot of times, remember, when this number comes in really big, it's not quite as bad. Wouldn't be surprised if it's like a minus 1 million, right? So it's still not necessarily the best thing, but it's not quite as bad as what this looks like.
And that's at 10:30 this morning. So
yeah,
watch
10:30 Eastern.
Yep.
And again, remember, use the 35-1. It worked last week. Last week it gave us a nice little long out of it, even though price ended up going, kind of coming back down again and then going higher. That 35-1 is good for about 30 minutes afterwards. It's good for about a 3-1 spike, and then look for profit taking. But I still think today we have the ability to get back up to that 101. It's about a $2-3 run to the top side. And again, it looks like you're like, wow, $3, that's huge. It's not as much because, again, remember, we're up at $100. We're not up at 60. Right. So a $3 move is, the same as what a $1.50 move was before, which is the average day of movement. So it's not really that big of a deal. We're at 3.3 right now, but looking at oil right now. Did I not put it on there? No, I did not. Let's see. Our ATR right now is $7, right? So even if we cut that in half, it's still around, I guess really just the middle of this chart, about 460. So we moved $3.40 today. You would say, wow, that's a lot. That's huge oil movement. It's not even half of a daily ATR right now. So
yeah,
could it move an additional $3 higher? Absolutely, and it would even be out of the ordinary for it to move that far. So just be prepared for that. But go to 35-1 about 10:15 this morning, and that will kind of help you set that one up. And then one thing I think we need to mention today, obviously VIX is down. They're talking peace again. Nice little gap. It's holding. Everything is in the green. Yesterday we talked about that 42.38. We kind of came up to it. We bounced off of it. We came up. We started base, and you're like, yep, it's breaking. That's the sign to break. And again, the Europeans really kind of sent this higher, and then again, the retail sales has pulled it back a little bit. We are in close proximity now to this 43.23. A big question that they had yesterday on CNBC, they were talking about it. They said the bonds market has priced in the increase. And there was kind of universal agreement on this kind of panel on CBC. The bonds market has factored it in. But has the stock market actually priced it in yet? And that was a question that they were kind of torn on. What that means is it's not great when there's a raise for the stock market. It tends to pull back. The question was it already factored in? Like if they come in at 0.25, is the stock market going to do absolutely zero? And the
Right.
board was kind of like, we're not really 100% sure on that one. We're not, the normal things we kind of look at, it's not always there. Everybody knows it's going to be 0.25, but then again, they may say, well, retail sales was down. COVID is locking down China. Would it be out of the ordinary for Powell to say, we still have a lot of uncertainty, and again, with retail sales going back, we already told you to prepare for another year of inflation, so maybe they don't, maybe
Does
they
he
just announce
surprise
something.
us? Yeah, that does he do nothing, or does he give us the half?
Yeah,
I mean, so yeah,
yeah. I
two
mean, my
P.
assumption is 0.25, but if
Yeah,
there is a surprise, could
boy, with this
if
move,
you say there's going to be a surprise, is the surprise guaranteed to be zero point 0.5, or could the surprise be zero? We're going to
zero.
hold off one more time because of, again, COVID is in China. They're locking it down. There's going to be supply chain shortages again. We don't want to. I mean, I don't even know. I mean, if a week ago, 2 weeks ago, if you said, hey, there's going to be a surprise, you know what I'd say? It's going to be the zero point 0.5, the way what it's supposed to be.
Right.
Now, if he said zero, could you be like, I mean, if he says zero in COVID, is anybody going to be surprised? So they said that the market may not actually have it factored in. So, there's obviously retail sales was pushing it down a little bit. Again, I would say today, with it being higher like this, a 0.25, the market is probably going to be like, yep, 0.25 is good. We're all right with that, So, but with it running up into some of these levels, ES is up here at 43.23, could be a great shorting opportunity. What I would do is see, after the initial open, the market's going to start jockeying, positioning itself. I'd say between 12 and 2 o'clock today is going to be really the place to kind of go see. All right, does the market believe up? Does the market believe down? Does somebody already know the numbers? That's
Yeah.
going to be kind of where to get this. So, we're not quite at a short area right here. NQ looks almost identical. You can see there's that kind of peak. It didn't quite get back to its high. NQ, it peaked, didn't quite get back up to its high. You could technically draw it here, although I would go a little bit higher with it. Kind of in the same scenario, a little bit of a pullback. Will it push higher to sell? Could be. YM, kind of the same thing. We had a level yesterday. We talked about the 35.50. It had already been kind of pushed. This was hit number 3. Look, 1, 2, 3. We rolled back. What did 4 do? 4 sliced right through it. We knew we had
Yep.
some levels here. So again, got to go a little bit higher, and it's in a better shorting area. And then Russell pushed its way back, and we said this one had farther to go. It is right at the 50. It is also basically at the same level. Remember, Russell's affected the most by the interest rate. So I'd say kind of see what that opening does. Again, retail sales was crappy too, and it's kind of hold firm. So they're all kind of in positions where it's like, yeah, listen, these all should probably go short, but the reality is the market is going to move it either up or down to pre-position it based off of what they believe it's going to do. And like I said, most likely it'll be 0.25. I don't know what the percentages are. A week ago, if they said, oh, it's a surprise, I say, oh, they did the 0.5 like they should have. Now, I don't know. With Powell, as dovish as Powell's been, if Powell said, you know what, we're going to wait one more, we're going to delay it because of the implications of 51 million people being locked down and the supply chain things that are going to come from it. If we're going to lock it at the June, I'm going to be like, I'm not surprised with Powell. So
No,
it's
I would
definitely
be
an interesting
surprised.
scenario today.
Boy, all right. All right.
You never know.
Well, we do have a lot to look forward to today. With that, any questions for Nadex, please email us customerservice@nadex.com. Brian and I are also both available. You got any questions for Brian? Please email him, support@keeptradingsimple.com. Any comments, questions, what you'd like to see more or less of, please feel free to email me, todd.rich@nadex.com. Yeah, just seeing that Canadian dollar strength. Yes, the Canadian dollar. There's inflation in Canada. They're going to have to do something. Plus, the Canadian dollar coupling again with the price of oil. It decoupled there for a bit, but we're seeing that U.S. dollar, Canadian dollar, coming down as we would expect to see that Canadian dollar strength. U.S. retail sales came in a little weak. We're seeing the equities roll a little bit, but we're still solidly in the green, looking to stay there going into the open. And then Oil inventory, 10:30 this morning. Pay attention to that. We had that massive surplus from API yesterday, but oil is very much a supply demand driven product. We'll see what the supply side looks like, whether the U.S. is holding surplus inventories or not. And lastly, of course, the big thing, 2 o'clock today, the Fed interest rate decision. Equities all looking to open in the green to start. We'll see what kind of volatility we get there once the Fed gives their announcement and we get a little bit more color commentary from their economic projections and any other news or information that comes out of the press session 30 minutes after that. Brian and I will be back again tomorrow morning. And until then, by the way, if you like what we're doing here, please, I like to say this at the end, just drop us in a like over on Facebook or on YouTube, wherever you happen to be catching us. Thank you so much for joining. We will catch you again tomorrow. Good luck in the markets, everyone.